Hello and welcome to the Power of Passive Investing, friends. We have a very interesting guest today, Ezekiel Korobkin. He is actually a CPA. We are excited because we were able to get a hold of him shortly after the busy season is over. I know it's very hard sometimes to get a hold of CPAs, so we are excited to hear. Ezekiel, welcome.
Hi, Alina. Thank you. Good to be here.
Thanks so much. Why don't we start with you sharing a little bit about yourself and how you became a business owner and a little bit about your bio.
Sure. So I majored in accounting in college. It was my fallback, meaning I didn't want to do accounting, but it was the safe option for me to study. And my grandfather is an accountant. He's retired. My other grandfather was a entertainment attorney in Los Angeles. And I tried to do different businesses before, as I graduated, I was trying to do some other, businesses, but I was always working in accounting in one capacity or another. And then eventually, about 10 years ago, I got my CPA license, and I basically started working with. I've been working with accounting firms, even before I got my CPA license. This is back in like maybe 2009, 2010. And then by 2016, 2017, I started getting my own, I started, went off on my own a bit and started getting my own clients. I worked with family offices, mostly in California. And now, been living in Florida the past 2 years. I've been expanding and, working with a lot of startups, some individuals, but mostly my focus has been small businesses. So, husband and wife, doing some sort of professional business, or financial technology, insurance, lawyers, doctors, real estate investing, all types of businesses. And so it's really been a lot of fun, and I get a real thrill out of helping people save money on taxes and getting their effective rate down, and employing a lot of different tax strategies, so that my focus has really become to be like a fractional CFO to businesses that are doing 50,000 a month or more, that need that ongoing help every month to manage their accounting and their tax planning.
I love it, and thank you so much for sharing your bio. So, have you ever worked for your grandfather? That was a CPA.
Yes, I worked with him, and like I said early on, I really didn't want to be in accounting. I really kind of wanted to get out and was trying to do something in entertainment or in apparel. But basically, my grandfather had you know, his right-hand man, another CPA who was training me at the time. This is back in around 2010 or so. And unfortunately, that CPA that was training me, he got sick and passed away pretty rapidly. So his whole office basically became my responsibility in a very short period of time, and that's kind of helped me realize that in every business, you don't want to have one person to be the only piece. Obviously, I'm self-employed, but other businesses, you have a lot of people in an operation, and every one person has to be able to step aside at some point, go on vacation, or let's say that person leaves. There has to be a plan to replace that person, because anything can happen. Not There's nothing guaranteed in life. Employees leave all the time. They quit. They get fired. They die. So you really have to have a plan, an overall strategy for keeping the business going. And that's a big issue with family offices. But in general, in every business, you need to have a plan to keep the business going if someone is not able to perform in any given position. So anyways, and back to where I was, I basically told my grandfather I'm not interested in being in accounting, really. So he ended up, I encouraged him to sell the practice because he wanted to retire. And so he sold the practice to another CPA. I ended up working with that new buyer for a couple of years. And then I eventually branched off and worked with some other firms. And then about 10 years ago, I started, working for myself and, getting my own clients.
Awesome, and I like that. It's you sort of gave it a try, and you at that point decided it wasn't for you, but you've come full circle essentially and started your own practice, which made perfect sense. And I do agree with you on the point of the business continuity. It's never good to have everything rely on one person because we're all humans. So of course, so it's always good to have a backup plan, a partner or employees, or set up the system in your practice so that you rely on a bunch of different people for different things, not just on one person. So the business continues no matter whether you're away or ill and whatnot, another thing. So that's definitely 100% in alignment with how I think as well. But I like your focus on small business owners and helping them to save on taxes. Taxes is, and again, as a former tax accountant, which again, I can also relate to your feelings of not wanting to be in the industry. I tried taxes, both public and private, and realized early on that I did not want to pursue it. So I left and went into information technology, so very much relatable field. But going back to the small business owners, it's one of those pain points that I feel like is always on business owners' mind, how to save on taxes. And even though I'm sure everyone would agree with me, that business owners want to save on taxes, they don't always know how. So from your experience, how would you suggest to business owners to approach saving on taxes? What would you say?
So the first step of really analyzing any business is the foundation of I call it the ABC of any business. So it doesn't matter what industry they're in. The basics, the foundation is accounting, budgeting, and compliance. So accounting is just making sure that the books are, reconciled. Everything is accounted for, so that at any given moment you can generate a profit and loss on a balance sheet. Those are the two financial statements that you're going to need. Then you need those to not only prepare your tax return, but you also need them in order to know how your business is actually doing. A lot of people will run their business kind of with the finger to the wind. They figure, okay, this month is good, this month is bad, but they don't really have the accounting in place because they don't know how to organize an accounting department or to do the bookkeeping themselves. And a bookkeeper there's many different levels of bookkeepers. There's the bookkeepers who've been doing it for many years and very experienced, and then there's bookkeepers who they just click on buttons and they hope for the best. So I've seen every level of bookkeeping. It's not surprising when a very successful business has a mess in bookkeeping. It's very common. In the beginning, I was kind of shocked to see how the books could be such a mess, even when a company that's doing millions of dollars of revenue. And on the other hand, a business can be very organized but just not making that much money. And in those cases, I tell the business owner, I would love to help you, but your tax problem is basically you don't have one because you're not making enough money to have a tax problem, really, or the taxes are $5,000-$10,000 a year, and it's not going to cover my fee. So I'm not going to work with the company if I'm not able to at least double. Like if I'm going to charge them $5,000, I'm going to tell them I'm going to save you $10,000 minimum, because I'm not interested in having 1,000 clients. I just want to have a couple good clients that that have successful businesses that have the budget to pay a monthly fee for fractional CFO services, where we're doing the ABCs. That's the accounting, budgeting, and compliance, and then from there we can build to the higher level of tax strategies, entity structuring. For example, having the real estate owned by LLCs, having a non-real estate owning operational business owned as an S corporation. That's typically what we see, and in your mind, what you want to do is separate out your operations from your investments. So you have two sides of your financial life. One is you're making money, you're using that money first to pay your bills every month. And then once you have more than that, you can do tax planning. You can now shift that money over to an investment side and say, okay, now my money's going to work for me. It's not just me working. Let's say, I need $10,000 every month to survive. Everything I make above that, I'm going to put into an account to, for my retirement. I'm going to use it to reduce my taxes by investing in real estate. All these things build on each other. It's like a big pyramid, so I'm not promoting a pyramid scheme here. It's just when you're building a building, you need a good foundation, and then you could build, knowing that your foundation is solid.
Awesome, love it, and thank you for that feedback. Makes perfect sense. So as a fractional CFO, you someone who represents the businesses and probably works with other CPAs that do compliance and strategy. Is that correct?
Yeah, it's other CPAs. It's attorneys many times, tax attorneys or just regular business attorneys. And so we need input, from the attorneys, from other CPAs who maybe have experience with that client for many years. And compliance is not just about, the taxes. You want to make sure you're in compliance with federal, state, and local. And so obviously that's filing tax returns, that's having, doing sales tax, paying the sales tax. Employees on payroll, very important. Make sure that you're in compliance with the payroll laws of your state and federal laws. And then locally, a lot of people don't realize they need a business license to operate where they are. Most cities require it. And so these are all things that a lot of young business owners or people who are new to owning their own business, they're not even aware. There's no advertisement on TV, ask your CPA if you need to get a business license or find out if you owe sales tax, because you're selling some stuff on Amazon. These are things that you have to know, and there's no they don't teach this in school. So you have to have someone on your team that is able to anticipate these problems, and not only anticipate them but know how to deal with them. And then, for example, insurance, they have their own set of requirements. You want to make sure you have insurance for your business, for yourself personally, health insurance. And a lot of businesses, they need to get loans, so they need the capital to grow, so they need to be in compliance with their bank. Their bank is going to require them to submit financial statements and to be in compliance with the debt to income ratio, whatever that loan is. There's a 50-page contract on that debt. So you need to have someone on your team who's able to deal with these issues, and the business owner themselves is not the right person to do that because they're too busy doing other stuff, and their expertise should be generating revenue and reducing expenses. But as a CFO, the biggest line item I'm trying to tackle is the tax liability, and going after that is where we could take someone who's paying 30% and get them down to 10%, and trying to get that percentage down as much as we can. But that requires many times moving money around, doing different things, investing in certain things like real estate, in their retirement accounts, setting up their health insurance properly, setting up their whole health, all their expenses relating to their health, to their family, shifting income around. There's all different types of things, but this requires a very high level of planning and experience to really do properly to reduce the tax.
I love it, and thank you for sharing that, Ezekiel. So, in terms of the write-offs, what would you say some of the more common write-offs that business owners typically miss, and where you bring up your expertise and level of knowledge, and it comes very handy because you've dealt with it in the past and you know how to properly handle it.
Right. So, I mean, a lot of it is the fact, like we mentioned before, that the books are not done. The books are a mess, or the person's just not keeping the books at all. And so
Wow.
you're not going to be able to capture expenses that you don't know about, right? So you may be able to tell me off the top of your head, okay, this is my monthly cost for my car. Roughly, I go out to eat, with my clients or whatever. I have roughly an idea of how much I spend on each category. If you're that organized, even in your own head. But most of the time, people don't even know what they spend on, and many times they're even surprised. So number one is just getting everything documented, all the credit cards you're spending on, all the, all the bank transactions, get them all reconciled, let's say in QuickBooks, and just get an idea of what you're actually spending every month. And then, from there, the big ticket items that people are able to write off a portion of many times is their car, their their home office. A lot of times, if they have kids under the age of 18 that can help in the business, they could find a way to write off, basically pay their kids and do that in a tax-free way. Paying off medical insurance and medical costs is a big one. And there are strategies for that even I wasn't aware of until recently. So there's a lot, but these are things that take off maybe a couple $1,000s. We have 401k, for example. You can stow away, up to $60,000, give or take, for every individual. But this requires, setting up a 401k. You gotta get the account set up before the end of the year, and you have to move the money. You can't just magically snap your fingers and save money on taxes. To do it right, you need to do it right. You need to put in the work and have all the documents, properly filled out. All the tax returns need to be done properly, and the money needs to be moved to these different accounts in order for you to actually do it right.
Makes sense. Thank you for sharing that. How would a business owner, and you mentioned earlier that it's someone who's making at least 50,000 a month or more, how would business owner determine, in addition maybe to this quantitative threshold, that they're ready to hire CFO versus just outsourcing it to some third party, or not doing it all, just keeping a bookkeeper and that's it?
Well, it just comes down to the pain of the tax that they're paying. I mean, you see business owners a lot of times paying upwards of 30% or more in taxes, and so if someone can find ways for you to save money, that's going to basically, let's say that they're able to save $20,000-$30,000, and it's going to cost them $5,000 to do that, then obviously that's a good move. So I just think it makes sense. If you're in a position where you're paying a lot of taxes, I think get a second opinion, get a third opinion on what your strategy should be. You never just want to see someone sitting on a bunch of cash. That's definitely not the most effective way to deal with their tax bill. So many times it's investing in real estate. Like I push my clients very hard to do this, and sometimes they listen and sometimes they don't. So, but your question is, at what point do you need a CFO? I think it's at that point where, you're paying significant taxes. Like someone making $50,000 a year, let's say they're netting $200,000-$300,000, that could easily be $60,000 of taxes, right? So if you're in that position where you're paying that kind of money in taxes and you want to find a way to pay less, and you're not happy with your situation, then I definitely think getting a CFO, whether it's a fractional CFO or a full-time CFO, someone with tax experience, finding out if your CPA can offer more active advice throughout the year, and not just, here's my books, please file a tax return. Because at that point it's basically too late. You can't really do much in January. You got to do the stuff in June, July, and before the end of the year, you got to do the planning. So that's the threshold, I think, is when you're making that kind of money, you're paying those kind of taxes, and so that's when you want to be exploring your options and getting advice from people who have that experience.
Yeah, I love that. Thank you for sharing that, Ezekiel. And essentially, it comes down to, do you want to keep more when you're making a lot of money, or are you okay paying high taxes, especially when you're in 30% or more tax bracket? So that makes perfect sense. And I also appreciate the fact that you said you're pushing your clients towards real estate. That was how I started my real estate investing journey, because I pushed myself to real estate when I realized how many tax write-offs one can get as a real estate investor. So definitely makes perfect sense. as we know, there's a potential changes in the legislature. A lot of people are excitingly talking about 100% depreciation coming back, while it still hasn't been set in stone. With everyone is hoping that that it may happen this or next year. Are you doing anything differently, or are you suggesting anything different for your clients this year because of this potential upcoming legislation?
It's a good question. I'm not really changing anything in terms of the advice I'm giving people, because even if you're getting 60% of the depreciation benefits, it's still a good deal. Meaning, let's say you're getting the depreciation, but it's not coming all in the first year, right? So what's going to end up happening is that you're going to get a smaller depreciation in year one, but in year two you're going to get to write off the balance of it. You're going to get the depreciation. It's just a question of timing. So I'm not changing anything in terms of how I'm pushing real estate. I definitely think even if bonus depreciation is only 40%, it's still going to be a very powerful way to reduce your taxes, and in a way that you're buying something that's going to hold value better than a lot of other investments. Meaning, you're getting a cash flowing investment that's going to give you potentially tax-free money for a period of time, which is more powerful than the stock market, less risky than the stock market, and potentially has much higher returns. And you actually are able to have a physical, investment that can't just go to zero based on some, on some stock, some downturn that just kills the stock. Like we've all seen stocks go to zero, companies go bankrupt, but it's rare you see a piece of real estate just get washed away. So that's the other thing. It's not only about the current year depreciation. It's also about you're able to leverage the bank's money to get that write off, and you're able to get the cash flow. You're able to write off the mortgage, the interest. As long as your property is breaking even, as long as you're not going out of pocket every month, you're winning. Meaning you're getting you're covering your mortgage, you're covering your holding costs, your insurance, your property taxes, and the property over time will appreciate in general. So that's kind of how the real estate is a very powerful tax strategy that I push anyone who is interested to get into it.
Yeah, no, I am certainly one of the proponents of real estate as well, and I appreciate your approach to this. I also like the fact that it's a tangible asset that you can touch and feel at any point. That definitely helps a lot for someone who has a background in accounting, and that you can use leverage, because like you can't really use leverage when you're buying stocks or ETFs. So that's a very different territory from that regard.
I mean, you can borrow money to buy money in stocks. I wouldn't recommend it to anyone because of the risk, and it's just, you've seen, it's a very risky proposition to borrow money to go to the casino. If you're buying real estate, it's more of a constructive debt. But I wouldn't tell anyone to borrow money unless they really have a good strategy that doesn't rely on other companies' performance.
Yeah, what we call it in real estate is good debt and bad debt. Good debt is the one that gives you a tax write-off, like the one in real estate, versus, as you mentioned, yes, you can borrow the money to buy Wall Street investments, but it's not going to be a write-off for you. So you borrowing it at your own risk, and then essentially gambling with that money at that.
Yeah, yeah.
Recently, or maybe not so recently, in the last somewhat few years, I've noticed the trend of people outsourcing work not only within the United States but also abroad. And I've seen a number of people outsource bookkeeping work. I personally tried that about 5 years ago. It did not work out for our group. But I was wondering, what's your take on outsourcing work abroad, and have you had any experience with that as well?
So I have not sent any work overseas. I have outsourced domestically. I've got some bookkeepers that are local, that are in Florida. I've got one actually in Canada right now, so I guess that technically I have, but it's not like India or anything like that.
Yes.
I have not done. I have had colleagues of mine, other CPAs, who have told me that they're outsourcing their stuff to India or other places like that, and it seems to be working for them in terms of they're getting good quality work for a decent price. But I have personally not done that. Maybe in the future I will, but right now I have not yet done that. But it's definitely a thing that people are doing, and it makes a lot of sense.
For sure, for sure. And yes, there are pros and cons to that. But my primary concern is understanding and being able to follow compliance. I feel like people that live within the United States have a better grasp on that. Obviously, you can teach others how to do it, but I think it just takes a little bit longer to teach others how to follow compliance of another country in general.
Yeah, I mean, listen, the fear is always that you're going to get someone in India or somewhere that's going to be, committing fraud or trying to steal money from your client. And so that's the concern. Obviously, you can't go interview these people in person. You have to kind of rely on the company that they're working with. And there is a level of due diligence you can do, I guess, but I don't know how comfortable I would feel knowing that I've got all this financial information in the hands of someone who's in another country, and if I wouldn't want it for myself, I wouldn't want it for my client. So obviously, if the client is okay with it, I'd be willing to try that. But it's something that does give me a little bit of it makes me a bit uncomfortable to do that. But there are ways to do it that are less risky, that are more transactional. But I'm just not there yet. So we'll see. Maybe down the line I'll get into that.
Yeah, no, I'm with you on that as well. And given that the fraud can happen anywhere, even with US-based employees, but I feel like for US-based employees, there is a lot more background check, KYC, like know your customer, and
Right.
other like financial check as well that you can do on someone who is US-based versus international. So makes perfect sense. Ezekiel, it's been great. Thank you so much for this interview. At the end, we typically like to ask our interviewees two personal questions. First one is, how can our audience find you, whether it's personal, business phone number or email, or maybe on social media?
So I have a website. You can definitely get in touch with me there. I got my phone number on there as well. It's profeta.com. It's profetta.com. And then you can leave my email in the chat here. And basically, which is my name, Zeke, my last name, Korobkin, KOROBKIN @gmail.com. And I really have been leaning a lot on the Calendly app to help me manage my calendar better. So I definitely tell people, get in touch with me, and then I'll send you a link to my calendar if it makes sense. If you're looking for, these services, fractional CFO type services, make an appointment. I'm happy to speak with you about your business and see if it makes sense. And from there, the tax strategies that we can do together, with the goal being that I'm always trying to at least 2x my cost. If I'm not 2xing it, I feel like I'm failing, and I don't want to be failing myself or my clients. So definitely would love to help those businesses out there that need the help. And it was very nice to speak with you and get your feedback and really great questions. So appreciate you, Alina.
Thank you for that. And yeah, for those that are looking, I think it's great that there's an option to have the initial conversation with Ezekiel and decide whether it's for you or not. And if anything, you need to look at the cost of fractional CFO as an investment. Plus, on top of it, correct me if I'm wrong, but it's a write-off, right? So the fee they do is a write-off.
Of course.
It's a good investment.
It is a write-off, and it's one of those things that should pay for itself.
Exactly.
So
Absolutely agree on that. Yeah, thank you for that. And the last personal question that we ask is usually, Ezekiel, how do you like to give back?
So it's a good question. I do believe in giving back in the forms of charity, and many times I offer advice to younger entrepreneurs that are not ready, that don't already have a successful business of their own. I definitely encourage people to start, because a lot of people think that by having just a regular W-2 job, they're mitigating their risk. But the truth is that the biggest risk is not taking a risk. So I definitely encourage people, start your own business if you feel the desire to do it. Don't be fooled into thinking that your job is secure, or there's no such thing as a secure job. The economy is changing rapidly. We have to all look out for our best interest. And how I give back is, giving that advice to people who are not yet where they want to be, and that's to take your future in your hands, and really build something, build yourself up, build up the people around you, and you'll be surprised how quickly you can grow.
Yeah, no, I love it. Thank you so much for that. That's a great cause to support. Again, Ezekiel, thank you so much for this amazing interview. And folks, for those that are at the point where you're not sure whether you need a fractional CFO, or definitely that you need one, I highly, highly encourage you to reach out to Ezekiel and have that initial conversation. And until next time, goodbye, everyone.
Bye, Alina. Bye, everyone. Thank you so much.